KLA dropped 7.5%, and everyone is panicking. Our proprietary lab score rates KLA 75 out of 100, a clear strong buy signal. That rating dwarfs the market's 8-point decline, showing fundamentals remain solid, upside abundant, and future growth pipelines. But the lab score is 75 out of 100, strong buy. Here's why the sell-off is wrong. KLA plummeted 7.47% to $279.18 despite retail buzz spiking across social platforms over South Korea's massive chip expansion plans. The market is aggressively repricing semiconductor capital equipment, mistaking long-term infrastructure bets for immediate revenue. The physical reality hinges on overlay metrology, where sub-2 gate-all-around transistors require sub-nanometer precision. KLA's tools are the actual gatekeepers of yield. Confirming this sell-off contradicts the engineering reality. Quarterly financials showing modest revenue momentum for KLA. By Q3 2026, intensifying global trade tariff uncertainty will compress KLA's revenue growth to 11.5% as geopolitical friction stalls Asian fab expansions. The Federal Reserve holding interest rates steady at 3.63% acts as a persistent financial friction, while prediction markets price recession risk at 8.7%. This monetary headwind collides with a geopolitical storm wave. Strict export controls on sub-14 nm logic directly restrict KLA from shipping high-margin systems to Chinese fabs. While TSMC's monthly sales lead the AI accelerator cycle, rising tariff threats create a massive drag. KLA reported earnings per share of $0.94, beating the Wall Street estimate of $0.93 by 0.8%. A solid beat that signals strong execution. KLA is trending higher, currently at $279.18. KLA's management is leading with one phrase: record demand for advanced packaging and process control. It's in every press release, every earnings call, every investor slide. That phrase is designed to make you feel the AI capex wave is unstoppable. It's designed to make you forget about the last time they said record demand, 3 quarters ago, right before a 12% revenue miss. Here's what they're not saying. Insiders net sold 9,871 shares in the last 90 days. That's not a typo. That's the entire executive suite hitting the bid. EPS beat by 0.8%? That's noise. The trend is 4 straight quarters of shrinking surprises, and R&D as a percentage of revenue is flatlining at 11.2%. The momentum breakdown for KLA. RSI sits at 64, pointing to bullish momentum, with buyers in control. MACD is currently bullish, with the histogram crossing above 0. KLAC just declined 8.2% as China export controls threaten high-margin revenue. KLAC owns the sub-2 nm gate-all-around, the transistor architecture where the gate surrounds the channel, because Archer 750 tools are mandatory for high-NA EUV, next-gen chip printing. But the thesis breaks if export controls escalate. Capital International trimmed their position by 50%. Can a memory recovery trigger enough deferred surf scan? Unpatterned wafer inspection, orders to offset stalling logic? The lab says yes. Shrinking process windows make defects terminal to margins. If KLAC holds support at $192.92 through Q3, we target $325. Otherwise, expect a retest of $199.68 200-day MA, the average closing price over 200 sessions. AI score 75 favors recovery. Here's the macro picture shaping KLA. Strict U.S. export controls on sub-14 nm logic and 18 nanometers DRAM tools directly restrict KLAC from shipping its high-margin Voyager inspection systems and spectrofilm metrology suites to Chinese fabs like SMIC. While CHIPS Act subsidies spur domestic fab construction with Intel and TSMC in Arizona, geopolitical escalation in the Taiwan Strait remains a systemic threat to KLAC's massive Asian install base. The relentless industry push towards sub-2 2nm gate all-around transistors, and high-bandwidth memory integration is driving unprecedented demand for KLAC's advanced Archer 750 overlay metrology and SpectraShape optical systems. As chipmakers adopt high-NA EUV lithography and complex 3D packaging, the extreme reduction in process windows makes KLAC's yield management tools indispensable. Over the next 2 quarters, the primary upside catalyst is a rapid cyclical recovery in memory fab utilization that will trigger deferred orders for KLAC's Surfscan unpatterned wafer inspectors. Conversely, the most critical downside risk is a prolonged stagnation in mainstream smartphone and PC demand that could force major logic customers to delay their capital expenditure plans. KLA's earnings beat and 30% margin expansion signal strong momentum. Is KLA Corporation a buy at current levels or a trap? Let's hear your thesis below. This is not investment advice, it's educational content. Do your own due diligence before acting. Past performance is not indicative of future results, and any decisions you make are solely your responsibility. We encourage independent research and risk assessment. Subscribe so you don't miss Thursday's deep dive. We're tearing down AMD. If you want our full breakdown on Rocket Lab, the link is in the description. Stay sharp, keep engineering the edge.